All right, good afternoon, everyone. Um, I guess we're just gonna wait maybe another 30 seconds to a minute, see if some more people come in, and then we'll get started. Got a lot planned for today. It won't be that long, probably anywhere between a half hour, 45 minutes. Shouldn't be anything longer than that. I have a full live stream planned, so we're gonna get to everything from macro perspective, scalping, swinging, day trading. We're going to cover everything. So, to all you guys that are taking out time during your Sunday where you can just be relaxing, hanging out with family, friends, to come on here and learn something new. You guys are already taking the first step in the right direction to becoming a better trader, to learning the market a little better, to understanding the market a little better. So I hope you guys all gain a lot of value from this. So I'll just give it one more minute. I'll start at 1:16 Eastern Time. If you guys can hear me okay, please let me know in the chat. Also, if you guys have any questions throughout the live stream, always feel free to ask questions in the chat when I'm done or between different topics that we talk about. During that time period, I'll definitely look for questions, or at the end, I will take all questions. So if you have a question and it gets overlooked, just stick around to the end and ask it then. See Matthew Ryan's in the chat. What's up, Matthew? Nice to see you here. Naveed, welcome. Okay, I think we're just about ready to get started. I'm just gonna, I only posted the link to Discord just now, so I'm gonna give them a couple of minutes to hop on as well. Ashish says, meme stock watch member here. Is there a video or tutorial for the hourly, daily, weekly triggers used? Same about LDPM. So we're going to speak about all of that today, and it's going to be posted for the meme stock watch members only after the live stream ends. GME, we can talk a little bit about GME towards the end. 2319, yes, that's what we're waiting for. All right, guys, so I don't want to keep anybody waiting anymore. Let's jump into it. So today we're going to discuss 7 topics. And the topics are, number 1, understanding the macro perspective of the trade. So for anyone out there that uses indicators to trade, whether you use MACD, RSI, whatever you like, I'm not going to get into every technical indicator out there, Bollinger Bands, etc. My point is that if you are solely basing your trading just upon indicators without understanding the macro forces behind the stock, your trading is going to be a lot more difficult than it has to be. And so what I always preach and what I take very seriously is before using your indicators to trade the live action, it is so important to understand the macro, to understand what's going on, to understand if you want to trade the stock long or short, instead of solely relying on indicators live as the trading is happening. Here's what I mean by that. We're going to give a quick example with Tesla from a report that everybody got on Thursday night for Tesla on Meme Stock Watch. So for those of you guys that aren't following yet, take this for example. Let's say you're in a Discord and there's a trader that everybody highly respects and they like following his trades. They think he's a great trader. They think he has a good winning success rate. So let's say he posts a trade. Let's say he says, okay, guys, I am selling puts on Tesla and I'm buying calls on Tesla. Both of those are bullish bets, bullish directional bets. When you sell a put, let's say, I'm trading SPY, and if I sell a 435 put, okay, and let's say somebody else buys it, the put expires worthless if SPY does not go below 435 by the time of the expiration. So let's say I sell 435 puts for next week. As long as SPY does not go below 435, the put will expire worthless. And so if I announce, let's say, or a recognized trader announces on a Discord, for example, that he's going to sell these puts, obviously you're going to want to keep following that on a day-to-day basis. So you're going to check his channel, you're going to understand his trade, you're going to keep tabs on it, you're going to make sure he's not closing it and you don't know about it. And so essentially what I just described is what we do on a daily basis, but we follow the big boys. The people with the big pockets, with the large pockets, the people who when they take a trade, they know something that we don't. And here's how we do it. And as we do that, as we follow these big players' trades, we simply are able to tag along with them. Now, let's say we know that a big player is betting long that day, which we're about to jump into over here with Tesla, then we're going to look to trade that long. But when we look to trade a long, for us, it's not just a buy and hold. Oh, they're long, we're long. For us, if they're long, we look to go long, but we look to buy and we look to sell using the indicators that we have. So that's what we're about to jump into. So we're going to take a look now at the Tesla report on Thursday night. And, here's VOEX, here's the heat map, all that good stuff. But what's super important is this table. And this table is how we track big players, big money, and how they're trading the stock. So for those of you that don't understand how this table works, trust me, you're going to want to pay attention for about 3 minutes, and then everything's going to be super clear and simple, and it'll probably change the way you ever trade for the rest of your life. Calls, puts, that stuff's simple. That stuff, I'm not going to get into how it works. If you don't know what a call works, if you don't know how a put works, that's something you're going to have to find out on your own. Also, out the money, in the money, again, all stuff that I'm not going to be explaining in this live stream. But let's say you know what a call is. Let's say you know what out the money call is. Essentially, this entire table is in the eyes of the dealer. What do I mean by that? Me and you, institutions, hedge funds, quants, investment banks, these guys all retail, in the category of retail. When an institution buys calls, who are they buying calls from? They're always buying calls from the dealer. So if an institution buys calls, then the dealer is now short those calls, because when you sell something, you're short it in our market. So the dealer sells calls, and so when we see on this table calls, out the money, short 636% increase, we know that a large institution or a large fund or whoever it was, somebody with deep enough pockets, if there's a 636% increase in bought calls, we know somebody big is betting long on the stock. Long calls that you see on this table are actually sold calls. For example, covered calls. So if me or you or an institution or an investment bank wants to sell covered calls or sell naked calls on a stock, who's buying the calls that they sell? The dealer. So the dealer is long the calls. When they close the sold calls that they sold, you see a decrease in sold calls. And so on Thursday, we knew that there was people out there with sold calls, large money, that closed them up, meaning they were bearish, but they closed them up, they bought back their calls before expecting a price raise. With this 636% increase in bought calls, and over here we see as well 616% increase in sold puts, I was able to give an update on memestockwatch.com. Tesla had a large amount of sold puts and bought calls, which are both bullish bets. It seems to me that there is more room left to the upside, okay? Now, this is the same table that I just showed you guys, sent it out. Because we were able to track big money, knowing that not only were they long calls, but they also sold puts, meaning they're really betting on price rising to the upside, I was able to send out an update that said Tesla had a large amount of sold puts and bought calls, both bullish bets. It seems to me like there's more room left to the upside. Similarly, I was able to post on the Discord. Let's see where it is. Hold on. I think it's a little higher. Yeah. So right here, Tesla sold puts. All right, 6/15, June 15th. Sold puts, same graph, 616% increase in sold puts. This is a bullish bet. All right, that's the main point. The main point is that when we are able to see a report like that, and when we are able to understand where big money is betting, right? They're clearly betting long here based on selling puts and buying calls. They're clearly betting long. So when we see this, we know that it's bullish. Okay, so now we understand the macro. On the macro, coming into Friday afternoon, we were able to understand that Tesla was bullish. Okay, very simple, because we just track big money. Now, if they buy back those sold puts or if they close those calls, we would also be able to track that. We would also be able to know that. We would also be able to know we would know that the night before already just by looking at the positioning. So the point that I'm trying to make here is now that we know that they're bullish coming into Friday. How do we make money off that? How do we profit off that? And the answer to that is now it's time to use the indicators that we have, whether you use RSI, whether you use moving averages, whether you use Bollinger Bands, whether you use MACD. Once you already have the macro direction, once you already understand how big money is positioned, that's when you could go ahead, go to your chart, use whichever indicator you use, and trade the direction and get the right entries and exits using your indicators. So for example, if you wanted to use something like triggers, which are a very useful tool for entries and exits, let's see how we would have traded it come Friday. So again, this is what I'm always preaching. As important it is to have good indicators that work and whatnot, it is all the more important to understand which direction you want to trade the stock before you even try to trade it, all right? We never just want to get in there with our indicators and try to trade without even understanding the direction. So this was Thursday, Friday. This is Friday morning. Stock opened at 257. It closed at 260. And there was, one big move higher here, one big move higher here. This is 260 to 263. So, obviously there's a lot of room to be making money on this move, and there was a lot of room to be making money on this move. All right, in general, once you see that amount of sold puts, of course, you can just go long with calls 4 weeks out, 10 weeks out, 3 months out. You can just long the stock, and as soon as you see them buy back their sold puts, you can close your long position. So one option could have been 9:30 opens, you buy calls, let's say price is at 257, you buy 270 calls for August, giving yourself 2 months time. At the end of the day, price was $3 higher or even $4 higher, or even if you wanted to close on one of these spikes, could have made money just like that. If you wanted to trade it, I usually don't trade in the first half hour, so let's say I would have missed this move, wait for a pullback, and then over here, once I get a bullish crossover, I would have went long right here on the cross, so let's say 259.80, and on the way up, I'm sure there were signs. If I dig deeper into velocity, etc., could have known to sell it. That's if I was using specifically triggers. If I wanted to use LDPM, for example, which is another fantastic tool for, so I would have went on the 5-minute, or I would have went on the 15-minute, and I'll show you guys how this works. This is really cool. So where's Wednesday? Okay, so here's how I would have traded this using LDPM, which is what I did on Friday, and I was able to make a couple of zero-day trades. I was able to hit a 30%er, a 40%er, just going in and out. So here's what I did. On the open, you guys can see liquidity is good, but look where LDPM, which is this purple line, moves below price, moves above price, right? When this purple line is below price, it means that there's good liquidity. When LDPM moves above price, it means that there's bad liquidity. When there's bad liquidity, price will fall. So when you have the report the night before from Meme Stock Watch and you are expecting to trade this bullishly, all you have to do is wait for LDPM to be below price to go long. And that's it. Once it goes above price, that's where you can tell the position. So if you wanted to buy it open, you could have bought this candle, let's say 257, 258, 259, depending where you got filled, and you would have been out right here at 262, where LDPM moved above price. You would have been patient here, and then again, once LDPM comes below price here, you could have caught this long from 258 all the way up here to where it goes back above price, 260.96 or 261. This is another $3 move. Chop here, but once LDPM moves back below price here, again, 250, 260, 263, could have caught another great move to the upside. If you like being a little more zoomed out, let's say you're not trading zero date, let's say you have a week or two on your contracts, so you could have either, if you miss this original pump, once LDPM moved above price, you would have been chilling, and then again, once LDPM moves below price, right here at about 259, you could have went long all the way till this 263 level, cut when LDPM moves back above price. Point is that once you have the macro direction of the stock, that's when you can easily go down to your indicators and trade it the direction that you want to trade. But without having the direction of the stock that you want to trade, it becomes super hard to trade it with indicators. And for me, that's probably the mistake that I see most. Retail traders come into the market, find a couple of flashy, cool indicators, but they don't really understand which direction big money is positioned in the stock. And so they're trying to scalp calls, scalp puts. But if you can just follow along where big money is betting, it makes it all the more easier to get on your indicators and just trade that direction only. See, when LDPM moved above price, I wouldn't trade this short. Why? Because I know that there was a large amount of sold puts and bought calls yesterday. And so if they're betting long, I also want to be betting long. So I'll use the indicators to bet long, but I wouldn't bet short. But imagine that I didn't have this report last night and I was just trying to use this indicator to trade. I could have went short here, probably wouldn't have made anything. Could have went short here, also wouldn't have made anything. That's the whole purpose of Meme Stock Watch, essentially, to give reports already the night before on where we think the direction of the stock is going, and then it makes it all the more easier to trade them using whichever indicators you want to use. LDPM for me is the best indicator for trading our Meme Stock Watch reports, actually, because it is so simple to understand, where liquidity turns good and where liquidity turns bad. When we were trading Tesla on the 1 day, you guys could see that the Tesla 1 day LDPM turned bullish at 167 and has been below price this entire time, never giving us a reason to exit our calls. And this was 1,000% winning trade. We actually have 3 more of these kind of trades coming very shortly that we think are going to be hitters just like this Tesla trade, so keep an eye out for that. But it just demonstrates how useful LDPM can be. Whichever time frame you're trading, if you're trading calls or puts that expire months out in advance, LDPM, you would use it on the daily, you would use it on the 4-hour. If you're trading, let's say, contracts that expire in a month or contracts that expire in a month and a half, 6 weeks, or 2-3 weeks, then of course you would go down to the 4-hour or even the 1 hour and you would trade it there. All time frames are simply depending on, how far your contracts. Would have just traded this on the 4-hour, you would have gotten out for a couple of mini drops, but you would have been in for most of the rise. Again, if you're trading shorter dated expirations, you're going to need to just keep on lowering the time frame of your LDPM. So if we were trading this on the 1 hour, let's say our calls or puts expired in, within a couple of weeks, so we don't have the luxury of just waiting in it. There was so many scalping opportunities. So, here from 161 to 189 was an excellent scalping opportunity. Could have gotten out here, went long again, 182, rode it all the way up to 200. Miss out on this noise and then go long again here at 198 and ride it up to 215. So many different options for many different kind of traders just by changing the time frame. And it's such a simple indicator. When LDPM is below price, it means the liquidity is good. Right over here, let's say. When liquidity is good, look how it moves below price. When liquidity is good, price tends to rise. When liquidity is bad, price tends to fall. Understanding that, when the monthly, weekly, daily, when the much higher time frame LDPMs are bullish, then, you don't want to be going to take a huge short position just because the 5-minute LDPM turns bearish. That's also very important to understand. But in general, when you have the report the night before and you have LDPM on your side, it becomes quite easy to trade. So let's give an example of yesterday's report on Meme Stock Watch about SPY. So let's go to ETFs. So yesterday for QQQ and for SPY, I wrote about VOX divergence. Notice how price moves higher today, but VOX moves lower. This is called VOX divergence, and it tells us that it's finally time to be risk off. I will no longer be looking along QQQ from here on out, and I wrote the exact same thing as on SPY until something changes. So we went risk off. I also wrote I'm not looking to start a short position over the weekend. I don't want to take a short position over a 3-day weekend, but I did say I would look into it over the weekend. So now, if you understand, and I wrote VOX is warning us that a pullback is imminent. Again, I will not trade short until at least Monday. Kind of took the day off on Friday. This was all Thursday night, June 15th. Here was the picture, price moving higher, VOX moving lower on QQQ. And on SPY, it was even a little more outrageous, price moving higher, VOX moving straight down, bearish signals. So you, as a trader, let's say you get these reports from Meme Stock Watch, and you're wondering, okay, so do I just take a short position and sit on it? Do I just take a short position and wait till the next update, what would you do in this situation? So let's say you wanted to trade this with a nice amount of time. Let's say you weren't interested in hyper scalping 0-day contracts, and instead you wanted to just build a short position for, let's say, July or let's say August. So what you would do is, had you have LDPM on your chart, you wouldn't here Thursday, Friday. So this is the first hourly candle. You don't necessarily need to go short just because the report says that VOEX is bearish and it's time to be risk off. You don't need to go short immediately, but once you see LDPM move above price, that tells you very simply, okay, liquidity is bad now. If liquidity is bad, we know price should fall. So once liquidity turns bad, and the report that VOEX is warning us that a pullback is imminent, as soon as LDPM gives you a reason to go short, that's when you could take a short position. So over here, the reason to go short was as soon as LDPM on the 1 hour moved above price. This is at 442. Could have been short, could have made a $3 gain to the downside. You wouldn't need to buy back this short until LDPM moves all the way below price, or until we notice something in VOEX or SPY that tells us that a rebound is coming. But this easily could have, if SPY is now going to pull back to 430 on Friday, you could have got in very close to the top just by using the 1 hour LDPM. So this is essentially the entire game plan, kind of meme stock watch, of our system and how we trade. It starts with understanding the macro economic or macro factors on the stock, and how do I want to trade this long or short based on the data that we have from deep dive stocks. And once we have the data from deep dive stocks and we understand, okay, VOEX is telling us that big money is positioned bullishly, or VOEX is telling us to watch out for reversal, or VOEX is telling us that the market is bullish. All these things, you could see here, as soon as VOEX moved into the inhibition zone, look what happened to price. VOEX moved into the inhibition zone right here. Price at the time was 244, kept rising. Price reached 260. Again, look when VOEX moved into the stability zone. It's a bullish finding. It's 171. VOEX moved all the way up. Price moved to 260, 264 or so. So VOEX, the heat maps, the snap graphs, the options positioning, all these things help us understand macro direction. But when it comes to the actual trading, that's when we come in here, we come into trading view, we come into the charts, and we use our indicators, whether you want to use LDPM, whether you want to use triggers, for example. So let's say, we wanted to trade this one using the triggers. So Friday, Thursday, Friday. So for here, price is above the hourly trigger, but once you have this bearish crossover right here on SPY, that's when you kind of know to go short. And if you're tracking our trigger screener, well, that wouldn't have shown up because we didn't have a 5-minute hourly cross. But if we're down here, we'll be able to see if there was any bearish crosses on Friday. So looks like coin had a bearish cross. Anything else interesting? GME had a bearish cross. Okay, so that's important. So watch on our screener. Obviously I'm not trying to buy puts on GME, and I have this there just to understand, what's happening in the stock. But if I'm watching trading live and I see this red cross on, let's say, Amazon, Google, Tesla, IWM, Meta, any of our tech stocks, Microsoft, Netflix, Apple that we like to trade, if I see a red cross here, we'll go to GME and you'll see what it looks like. Where's GME? So right here with this red dot, we saw the 5-minute trigger cross below the hourly trigger, and we know that's a bearish finding. And the hourly trigger crosses below the hourly. That's kind of, on a regular stock, obviously I don't short GME ever, but on a regular stock, that's kind of where I would go short. Let's say if it was a tech stock. So I'm not sure why that's not going away. Point is, if we already understand yesterday, okay, we understand yesterday that we're expecting a bearish market, QQQ, SPY, VOEX told us to expect bearishness, then quite simply, we're going to use our scanner. We're going to wait for either LDPM to turn bearish on a stock. We're going to wait for a bearish trigger cross, and then we're just going to trade it short. So let's see if there's another good example that's not No, there wasn't any on Friday. I guess it didn't get bearish enough yet. But for example, if GME was Google, Amazon, SPY, QQQ, any of the stocks that we do trade short, then as long as we're watching throughout the day and we're watching for bearish trigger crosses, then we could just go short. When we see a red dot come on, we come down to the chart and we trade it short. Over here, you got the cross, and obviously would have made some profit. Coin, let's say the night bullish instead. Okay, let's inverse this. Let's say we knew that we wanted to be bullish the next day, so we look at coin, which had a green dot right here, which means a bullish cross. And we'll take a look at what it looks like. So coin got a bullish trigger cross right here. If we're watching this live, we'll see this green dot come up. And if we knew that we wanted to trade the market long that day, or let's say I don't cover coin, but this is random stocks right now. I'm going to tailor it afterwards to just the stocks that we cover. But, if I was trading coin, let's say I check the data report. I type in coin on my watch list. I think it's here already. Okay. Let's say I knew I wanted to trade this stock long. I read the report. I see bullish positioning. I wouldn't go long right away, but I'd know that I want to go long. And then once I see this green dot, bullish trigger cross right here, price was about 53. I could have went long, $2 profit on calls. Simple as that. If I knew I wanted to trade this long already. So that's the advantage of understanding the macro beforehand and then waiting for your indicators to tell you to go long and then exiting when your indicators tell you to exit. So essentially, and you can use the same thing on the macro level. Let's say we only want to trade hourly trigger, daily trigger crosses. So 1 hour daily trigger crosses. So watch this. Okay, so first off, we have Tesla. Tesla gave a green dot Thursday, May 18th. So we're going to go to Tesla. And let's see how much profit we could have made trading just this green dot that appeared. Okay, let's move that out of the way. Here's the green dot. So we would have went long Tesla on this beautiful trigger cross right here. Price was about 174 at the time. And we would have caught granted we did, but you guys, could have caught a 52% $90 move to the upside. All right, let's look at MA. MA just had a trigger cross. So let's pull up MA. So if you're watching this live, you see the trigger cross on MA, you come here. Price was about 376 at the time. Could have went long all the way up to 382. Maybe there was something here to sell, maybe not, but also price could continue higher. Essentially, here, let's look at another one. You see AMD right here was a trigger cross. Let's check AMD. By the way, if you guys are from Meme Stock Watch or from the Discord, just remember the name AMD. I think there's a big move coming here, but let's look what the trigger cross was right here. AMD, bullish trigger cross right here down at 90. So just going long over here could have made $42 to the upside. This is, a life-changing opportunity, obviously. Anytime you make $42 on a contract, that's the difference between, being financially free and not. These kind of trades can set you up for life if they're played right. So, it all depends on what indicators we have. Yes, some of us may have better indicators than others, but that doesn't necessarily matter as much as, once you understand if you want to trade long or short, just diving into the indicators and doing it then. LDPM is something that's public and costs $35 a month, literally. 20% off with code SimplyDeep. But let's just take a look at how this would have performed. If you were trading this on the daily, right, anywhere in May, daily LDPM moved below price. Just delete the noise. And let's say we're recovering AMD at the time. So we're covering AMD. Around this area, we see bullish option positioning come in. I forecasted on Meme Stock Watch. You guys that have LDPM, you come here, you see the daily LDPM move below price. You get long at about 86, and you could have stayed long all the way until 118 when LDPM moved back above price. Now, over here, of course, we could see LDPM is above price, but on the next time that LDPM moves below price, that's kind of where we want to go long. We'll be in touch, but we think AMD could push to new highs 150, 160 again, catching a $40 move with options. That's kind of, you know, the life-changing opportunities that the market is giving us right now. In terms of trigger signal, also very simple. We kind of just waiting for price to pull back to the daily trigger, and then we want to see the hourly trigger come down like this to the daily trigger and airplane off it, all you guys that know about this. And we kind of want to see price move down to the daily trigger, get, you know, cluster in here for a bit, and then explode past the hourly trigger and move up strong to the upside. And again, when we're here, when price is ranging in this area and we see, let's say, bullish options positioning coming into AMD through our reports, through our, right here, we'll easily be able to see when bulls come in to push the stock back higher, or we'll see it in VOX, or we'll see it in the heat map, or we'll see it somewhere in the data report, because stocks don't just move out of nowhere. We'll almost always see them in the data report before they happen. So, you know, for example, AMD just took a hit. I bet if I go back a couple of days and I check at AMD, you guys will all see the puts that came in. I haven't checked it, so we'll do a live test right now. We'll see where they came in the past week. Let's see, AMD came down from 132 to 120. So first of all, you know, VOX came down already. VOX was coming down while price still was going up. That's already VOX divergence. That was warning you to watch out for a move down. And here you go. You know, 38% increase in bought calls, in bought puts, 155% increase in sold calls, which is a bearish bet. When you're selling calls, you want the stock price to go down, kind of, so that your calls that you sold can expire worthless. So again, you know, it's fairly easy to see the bearish options positioning coming before, and then just get on your indicators and trade it that way. So that's what I wanted to explain. That's basically, you know, if you guys don't want to pay the $150 a month for access to deep dive stocks data, which is how we see all this data that we're looking at right here, that's essentially what Meme Stock Watch was created for right here. Now, we don't cover every stock. We only cover GameStop, AMC, and BlackBerry now, along with Bed Bath & Beyond, but only, you know, if it starts moving again. We cover 4 tech stocks: Amazon, Google, Apple, and Tesla, and we cover SPY and QQQ. Now, later down the line, obviously, we want to add more. All our founding members, anyone that joined before that, will obviously not have to pay any price increase, but the prices will be raised then. But if you guys, again, if you want, you know, sort of like a cheat code to understanding market direction before you start trading it with your indicators, this is where we give all the important data from here on the 8 stocks that I just listed is always going to be up on Meme Stock Watch before the next day. And so you have the advantage of understanding macro direction, and then it doesn't matter which indicator you use, you'll be able to trade it as soon, being that you know which direction you want to trade it, as soon as your indicator starts showing that direction, that's when you could trade it. Now, personally, I don't think there's a better indicator to trade than LDPM because of how super simplistic it is. Whether you're trading calls, puts, whether you're trading with time on your contracts, whether you're trading zero date. Like a lot of times I'll scalp zero date contracts with LDPM. You know, quite simply, let's say on Friday, price opened below LDPM, trade this short, and then as soon as it comes back above LDPM, I'll trade it long. Let's say I knew the entire day that I wanted to trade it short, right? Then not when LDPM moves below price, I'm not going to trade it long, but when LDPM moves above price, I'll trade it short. If I don't want to, you know, keep on going in and out on the 5-minute, I could have really just went short using the 15-minute and pretty much stayed short the entire day. If I was trading it on the 30-minute, yeah, could have been short the entire day, no problem. So LDPM moves above price at about the 124 level. I could have just sat in puts. As long as I have time on my contracts, I don't have to worry so much about trading the 5 and the 15. Could have just held short, caught a $4 move to the downside. That's really nice if you're playing with contracts. So that's pretty much it, guys. You know, if you're a Meme Stock Watch subscriber and you want to take advantage of this data, it's going to be really hard for you to take winning trades without knowing exactly when to enter, without knowing exactly when to exit, without knowing, you know, okay, maybe the forecast was wrong today, I'm just going to stay safe. Like, let's say last night I posted AMD was bullish, okay, but you see LDPM move above. Now, I doubt we're ever going to make that big of a mistake, because when there's a big move down like this, we almost always will see it coming beforehand. Like, you know, if we were tracking this, obviously I would have known that this was bearish based on the bought puts and based on the sold covered calls or sold naked calls, also based on VOX clearly pointing bearish. Like, that's extremely obvious. So you would have known that if we covered AMD, you would have known AMD was bearish. You could have just waited till LDPM moved above price and then went short. And that's how you take advantage of our forecast on meme stock watch. But if you want to take trades off our forecast on meme stock watch, you have to have something like LDPM to let you know when to get in, when to go out, when to, when it confirms the thesis that we're bearish, or if it, tells us, okay, you know what, maybe the forecast was wrong, LDPM is showing us the opposite way, let's pull out for a bit and let's just wait to see what happens. So for those of you that want to use the meme stock watch forecast to trades, I know it's an additional cost. Again, this isn't my indicator, this is Justin's indicator, but Justin from Deep Dive Stocks, but he was nice enough to give any meme stock watch member 20% off with a coupon code simply deep. If you need the coupon code, just DM me, I'll send it to you. But yeah, I mean, that's how, if you want to, be taking winning trades off the meme stock watch forecast, then you're going to need something like LDPM. Or if you already have something really good that works for you, any combination of moving averages, RSI, MACD, Bollinger Bands, whatever you use, technical analysis, then you can use that as well. If you don't have something like that, if you don't have an indicator that you can always rely on to always, tell you the truth about what's going on, nothing does it better than LDPM showing real-time liquidity, whether liquidity is good or bad. Then I would highly suggest reaching out to Justin for it and, using the coupon code to get it for cheaper. Once you have these tools at your disposal, the macro report from the night before, knowing if you want to, you see, IWM last night. I forgot to post this, so I'm not really gonna get into this about what happened, but this was the 1,129% increase in bought puts and 1,105% increase in sold calls. That's really, really bearish. IWM hella bearish. So let's go to the IWM chart, and let's see where it turned bearish, right here at about 186. That's where LDPM moved above price and stayed above price throughout the rest of the day. Could have traded this, let's say on the 15-minute again. LDPM moved above price here, could have gotten puts right here, and then that's it. This is the trade right here. 1, 2, that's it. You don't need to stay in forever. You have the bearish report, you make money off it, and you wait for the next day, because every single day there's more plays and every single day there's more opportunities to make money. So with that, that's pretty much the end of... oh wait, one more thing that I totally forgot to speak about is Gavins Levels. This is another entire addition to the work that we do here. And I'm not sure how deep I want to get into it right now, but you guys that watch for Gavin's updates right here, basically Gavin, if you guys want to just learn one last thing that we use for trading, if you don't want to use any indicators whatsoever, and I mean really no indicators whatsoever, and you just want to trade price action, you can do that with Gavins Levels. Again, we have something for everybody. We have a way to make money for everybody, no matter what you prefer in your trading. So levels, essentially, all it means is that you get the levels from Gavin beforehand. However he makes them, that's nobody's concern. You could ask him if you want to learn how to do it yourself. But the goal is you get the levels from Gavin. And the rules are quite simple. If price closes the hour above the level, it will push up to the next level. If price closes the hour below the level, then it'll come down to the next level. For example, GME 23.16, 25, and 27.24. Price closed the hourly candle below 25, and so now we believe it'll come down to the next level below. As long as price closes the hour above 23.16, we believe it'll push back up to here. Same thing with SPY, same thing with QQQ, same thing with any other stock in the market. Now, half-hour closes are okay to take a position in, and hourly closes are stronger than half-hour closes. 4-hour closes are stronger than hourly closes, and daily closes are the strongest, obviously. So let's go to QQQ because I was able to hit a monster winning trade on last week simply due to this method. So watch what happens here. What is with this stuff? Okay, let's move it out of the way. 361.53. This is one of Gavin's levels. Let's go to the 1 hour. Show you guys how this works really quick. And all of Gavin's levels every single night will be up on memestockwatch.com for all the stocks that we track. So you don't need any indicators. You can simply use this method to take winning trades as well. It's all about the hourly closes. So 361.53, the next level was 366.08, and this is not a level, this is my own thing. Next level was 370. So notice how 1030, right, close above, and 1330, look how close this was, all right? The fact of the matter is that the hourly closes were above. I think the 5-minute will help demonstrate this a little better, actually. So I'll zoom down here for you guys. Okay, 1040, 1045, 11 p.m., 11 a.m. close, all right? Then we come down here, 1425, the half-hour close right here was bullish because at 1430, closed the hour above the level. And then move over, 1435, 1440, 1445, and what happens? Price moves up right to the next level. Now you guys probably think, oh, he put the levels on here after, but it's not true. The levels were here before, not after. They were all here before on the QQQ charts and in the Discord and on MemeStockWatch. So everyone had access to the levels beforehand. Now what happened here? 1125, 1130. So that the half-hour candle closed where? Above the level or below the level? Below the level, right here. Because the half-hour candle closed below the level, price came back down to this level. Now watch what happens again. Ready? So first of all, as soon as this half-hour, 1430, closed above 361.53, that was a sign for me to get long until the next level. I also used the LDPM to trade it. Let's say I traded it on the 15-minute. Let's say I was using LDPM at the same time. So where were we? Right here. So here is where the half-hour closed bullish, and then LDPM moved below price here, and then sure enough, price rises straight to the next level. LDPM flips bearish here, but we also had the bearish half-hour close earlier, and price moves straight down to the next level. So many things in confluence, right? Bullish half-hour close on the level, LDPM turns bullish, price moves up to the next level. Bearish half-hour close, LDPM turns bearish, price moves down to the next level. Now watch what happens here. Here's the hourly close, right? 14. Let's go down to the 5 minutes. You can see it a little more clearly. For some reason, my trading view is actually running a little slow today, so apologize about that. Right here. So you'll notice that the hourly close was above this level. And once you have a bullish hourly close, you expect price to move up to the next level. So even if there's a fake out below, none of these fake outs matter because only the half-hour close matters, only the hourly close matters, and only the 4-hour close matters. So because we already had the bullish hourly close above this level, 14 right here, then when price dips below 1420, 1425, these are buying levels. Because we already had the bullish hourly close, we know price is not going to slip down. Then you'll see 1430, price closes again above the level, LDPM turns bullish, and price again moves straight up to the next level. So, almost like magic, but this is how our market is programmed. This is how the algos work. Now, over here, we had a price close the hour below here, so bearish. But you'll notice here, 9:50 and 10 o'clock. At 10 o'clock, what happened? It was close, but price closed just above 366.08. You guys see that? Price closes just above 366.08. What happens? Price moves up straight to the next level, 370. So this is also another very, very simple method to take trades just based on half-hour closes, just based on hourly closes. I